My name is Sean Brodrick. I'm from Florida, and I have a cold and in the wrong weather for it, obviously. I should be back in Florida where they're frolicking around in sandals and shorts right now. And, well, don't envy us too much. The summer is coming, right? So we'll have our own time in the sun. I remember some summer mornings I actually wake up, do things around the house, and I say, oh, I have to mow the lawn, you know? But I'm thinking, oh, my God, it's just so hot out. But, you know, I do it as, like, you know, part of keeping my fat down somewhat. And one time I said to my wife, you know what, I'm just going to go mow the lawn in sneakers. Well, let's see if the HOA says anything. Why not? You know, I'll just run out there, whip up and down, get the lawn done, and just finished that. And my wife looked at me kind of a longish while, and she said, honey, if you do that, people will think I married you for your money. So we compromised on no war shorts. But this is me panning for gold up in Alaska, hoisting a silver doré bar in Mexico. I'm a boots on the ground kind of guy. Some of you may know me from the Oxford Club, where I was for 3 years. Last year, I had the best performing newsletter at the Oxford Club. Best performing front end, I should say. I had a monthly newsletter, Oxford Resource Explorer. Now I am with Weiss Research. I just started up a premium gold microcap service, and I think it's a good time to start it, actually. I'm kind of glad I missed the past couple months. I'll explain why. And I have to tell you, after this past week, I came into this conference thinking, all right, we are going to have to work through some carnage here. It's going to be at least late June until we can look for things to go higher. But after talking to people here, my mind has changed, and maybe not for the reasons you might think, but we'll get to that because I'm already wasting time. 2 minutes gone. Let's move along. All right, I am going to talk about miners and developers. I think really developers are in a great spot in the market right now. Explorers, I'll speak about them because that's kind of the thing that I really cover. There's nothing wrong with gold, though. Those earrings right there belong to a princess of a lost civilization called the Wari. They lived in South America before the Incas. When their capital was at its peak, which was 1000 AD, it was as big as Paris was at the time. Now, we know nothing about them. We even made up the name Wari. We don't know what they called themselves. We just found the earrings in a tomb. One's a little dented, but you could put those in a shop window otherwise. Gold lasts forever. Gold is a great thing. That's one reason why I like gold. I like other metals, too. And I hope at other conferences you come to my presentations on cobalt and lithium and all sorts of things. There's a lot going on, but we're going to talk about why I think gold miners are really ready to ramp up. First, we have to talk about the new bull market, right? Most people, unless you're feeling especially ornery, will agree with me that last year we entered a new bull market for gold after a brutal 5-year bear market. Boy, was that tough. That's one of the toughest ones I remember, and I am not a young pup. So, you know, that's over. We're in the bull, and when you're in a bullish cycle, you can buy pullbacks. You hopefully have the patience to hold on for deeper pullbacks because that's when you get the best bargains. There is no magic length to any cycle, but gold is cyclical. So 5 years would be average. Considering how harsh the bear market was, 7 years wouldn't surprise me, frankly. But we can have long periods of quiet. The last time we had a gold bull market, things took off, and then things went to sleep for 18 months. And that's some things that people have been talking about here at this conference. I'll explain why I think that might happen, but it might not, too. Let's talk about supply. Well, these are some charts I made for Uncommon Wisdom from widely available sources, really. You just have to put the charts together. But 2016 mine production of gold was flat. We've had years of low gold prices that have crushed exploration, spending on new mine development. Of course, gold production is going to go down. You can call it peak gold, but considering how peak oil worked out, you might want to call it something else. The thing is, we know that they can't start mines up that quickly. It takes an incredibly long time to put a mine from a barren field to actual production. So we kind of know what's coming on for at least the next half decade to a decade. And yeah, we have hit peak gold supply for a while. Meanwhile, the trend in miner reserves is just bullish for prices. This is compiled from a survey of the world's biggest gold miners: Agnico Eagle, Anglo Gold, Barrick, Kinross, Newmont, Newcrest, and Yamana. They just came out with new information on Tuesday, but I was too lazy to get it, so we'll stick with the stuff that's 6 months old. And so it shows their global reserves. The trend is down. They have lower reserves, and so this is going to make them, I think, kind of desperate to fill those pipelines. This was the money that was being raised in the junior mining market. You can see how it went, right? From 2010 and 11 and 12. Well, 12 really kind of fell off, but they made plenty of money. They were able to raise plenty of money. But then we got into that bear market depths, and there was a while where they couldn't make any money. Now, I can tell you that in March, they raised a tremendous amount of they raised a tremendous amount of money. Part of that was just one big deal, so if you back that out, they still made good money. So maybe the drought's over, but even if it is, there was a long time where no money was being put to work in this sector, or very little of it anyway. And so what's that mean? That means there's a gap. There's a gap that's coming that has to be filled, because what happened is that the big miners outsourced their hunts for gold. I mean, they had huge exploration teams. Many of those teams got let go. I know, because I know the gold exploration companies that were founded by those teams. When they were given their walking papers, they went out and they started their own companies. Some of them are doing extraordinarily well. But the big miners figured out that it was actually less trouble and certainly less money for them to just buy up these little tiny exploration companies when they found something good. And so then they didn't have to keep the big exploration team around. They could just buy things as they came up. And so now they're taking positions in these explorers slightly under, the amount where they'd have to declare, and just waiting and sitting. And I think that's great, because it's a big flag for me, like, maybe I should sit with those guys. They think that's a good company to be invested in. Sometimes once that happens, the stocks take off. I find that if you aren't in them when they declare, you shouldn't chase it, because it will come back down. We saw that with Gold Standard Ventures, Gold Quest, stuff like that, which are great companies, and ones that were in a recent report I put out. But they got expensive. They got pricey in a hurry, because then everybody did what the big boys were doing. And so there's a lack of new supply coming through the pipeline, because they had put everything off to the explorers. We'll just buy you guys, but then the explorers had no money to spend, and this is just a big gap in future supply. So let's talk about demand for a little bit. If you see that circle up there, right there are more people living inside that circle than there are living outside of it. This is one of my favorite charts. It hasn't changed that much. But what has changed is the numbers keep going up. In 6 years, China's middle class will swell from 300 million to 550 million. That's nearly 200 million more people than the United States. Outside of India and China, another 650 million people spread across Southeast Asia. And Asia's middle class is expected to hit 1.7 billion people by 2022. Why does that impact gold? Because those people tend to have a cultural affinity to gold. And so, as they have more money in their pockets and they can actually buy things, we tend to think one thing they'll buy is gold. Now, last year, parts of the year anyway, were actually terrible in places like India for gold demand. That's because India's government got all grabby and, just did some really terrible stuff that I think if it happened in America, we would have a revolution. The Indians went along with it. In any case, they weren't in any mood to buy gold. But now the Indians have come back in the market because things have settled down. We are seeing demand go up in China as well. So the imports into both countries are actually doing well. That said, the first quarter numbers on gold demand just came out and they're down 18% year over year. That sounds bad. unless you realize that the first quarter last year was the most phenomenal quarter that they'd seen in many, many years. So down from the most phenomenal quarter is not bad at all. It's actually quite good. Central bank demand, well, that dipped to 76 metric tons, but you know, they're still buying year after year. I wouldn't worry about the quarterly fluctuations about that. And so this is a big force. People think about the US and Europe as places where there is demand for gold, and maybe investor-wise, yeah, but the big consumer demand, it's in Asia. It's in that circle. Central banks, I just told you about those guys. They have been buying for 7 straight years, so yeah, the fact that their demand dipped a little bit isn't too much to concern me. And meanwhile, we have the US debt. This is not part of something that is demand, but it's something that keeps me awake at night and I think about, right? Because there's $61,000 per person in US government debt. You folks in Canada, you don't have to worry about it so much, but yeah, we're kind of hooked to us. You know, you're the hat that America wears. And this is a debt that could be very problematic. The government solution will be to print more money, and as you print more of something, that's like taking its value and running it through a shredder, but you can't run gold through a shredder. So here are some charts that I pulled off the old Bloomberg that I found interesting. You may know that the big gold ETF, GLD, had record selling just 2 weeks ago after the centrists won the first round of the French elections. We could go into that later, or else maybe I can talk to you about it later. But people use the GLD as a fear trade thing, really. And so the GLD sold a lot when it seemed like the centrists were going to win, and they'll probably win tomorrow. However, this is a chart showing all the gold ETFs in the world. You can see how much that selling actually mattered world-wise, because other gold ETFs are still picking it up. Silver, meanwhile, everybody hated silver earlier this year, just hated it. But suddenly that's starting to come back. That's more speculative and something that I think is actually an indicator that things will get cooking sooner rather than later. I could be wrong. Some people who have spoken here have said things won't pick up till January. Maybe they're right. But it's weird to see silver holdings and ETFs pick up like that without people starting to actually have a good reason for it. So we'll talk about the shorter term forces in gold, right? Investor demand, single most important short-term swing force in gold, especially gold ETF demand in the US, that's the GLD, and that has been down recently along with the price of gold. That, in fact, is probably one of the major drivers of what's going on in the price of gold. Negative real interest rates, they were negative, they're slightly positive now. It depends on what benchmark you use for the real interest rates, of course, but it's certainly not as much of a drag on gold as you might think. Political instability, not only in America, but around the world. I swear this is going to be the year of black swans, things that people really won't see coming. And the potential for a global financial crisis. China had to call a special meeting of its legislature to deal with their debt crisis. They're coming out with new rules, which is scaring the bejesus out of investors over in China right now because they don't know what the rules are. They've actually put some in place, and no one likes those, so they can't wait to see what else comes down the pike. So, but the reason that they're putting the new rules in place is their debt crisis is just getting out of control. And so then there's the US dollar seems to have peaked. It just dipped below its 200-day moving average. It gapped down last week, never recovered. Gold is priced in dollars. We have the seesaw of pain. Eric was speaking about that earlier, that now gold and the dollar are moving in the same direction. And that does happen, but the most of the time, they actually move in opposite directions. And we'll talk a little bit more about the US dollar, because I got to talk about this guy. And because I'm a US citizen, I have to kind of figure out, you know, what is actually going to happen. If you're Canadians, you may not care less. Mostly I just get strange looks from people. But the thing about Trump is that people have very strong feelings about him, one way or the other, that often do not have a basis in fact, because they have feelings, and the feelings trump the facts. And some people trust him quite a bit. And so any truth you might put out there, they don't care because they trust him. And what this means is that he has a hardcore base that won't give up on him no matter what. So don't worry about his like, how popular he is. That doesn't really matter. He could serve 2 terms if he wants to, I think, but I also think he would rather be golfing. He's a 70-year-old dude. You know, he already became president. Why does he have to stay in there twice? So maybe only be there once. But while he's there, his policies will be in place. Weak government, corporate strength, low growth, and I can explain that in a bit. Tax cuts is a cure for everything, and a weak dollar policy. Why would he have a weak dollar policy? Because if you don't really want to grapple with the intricacies of actually getting an economy moving, one thing to do is to lower the value of your currency, which increases your exports and boosts the economy that way. And he has talked about the currencies a couple times. Of course, sometimes it seems like when he wakes up in the morning, he just rolls the dice to see what his position will be. But it seems, from what we've seen, that he likes the weak dollar policy no matter what Mnuchin says, no matter what, really whatever. We've seen the dollar peak, and now it's going off. So that is the most important thing. Now, I've seen other presenters talk about the fact that the hard data is quite bad, and everybody seems to feel good. And that confuses the heck out of them, right? One reason why that is because after the elections, Republicans suddenly started feeling much, much better about the economy. And there are stats on this. I was just looking at it. They went from 31% being bullish on the economy to the most recent thing in April was 60% being bullish on the economy. That is why there are sentiment indicators indicating things are quite good. Will that change? Feelings trump facts. Trust trumps truth. That may not change, which really sets up a strange disconnect. We're going to have to see how that works out. I got 3 more minutes. All right. How many here think that the Fed will raise rates in June? Oh, what a bunch of stick in the mud. Well, you're all wrong. Okay. So I don't know if the Fed will raise rates in June. I think not likely, because I think something will come up, and there's something odd with the global economy. When you look at what's happening with the price of copper and something like that, there are serious signs that things are slowing down. It doesn't mean we have to go into recession, but if things are weakening, the Fed would be stupid to raise, because they have to think about their own legacy. This woman has to think about her legacy. And other indicators really aren't helping. Global inflation expectations, well, they're peaking too, which takes pressure off the Fed. They don't have to raise. And the economic surprise index, well, good surprises are kind of falling off the map. So these are the things indicating to me that she won't raise. But if she does, the last time the Fed has raised, that takes pressure off the gold market, because everybody says, okay, that's it, that's over, and then the price of gold goes up. So those of you who put your hands up, I hope you're right, because that will be an indicator for the price of gold going higher, and that was my initial reasoning for why gold might go higher starting in June. I will speak a bit more on that. These are just some things. Again, I'm just fooling around on a Bloomberg terminal, looking at things. One metric people like to use is price to free cash flow, and I took these out of the Gold Explorers Index, which is GOEX in the US. And these companies are cheap on a price to free cash flow basis. Now, many of them have things wrong with them, but this is where you as an investor get to put on your thinking hat and figure out if it's a good buy or not. Is the problem fixable? Do they have good management? Was it a one-time thing that really just kind of knocked them for a loop, but they're going to recover next quarter? If that's the case, then you know what? Buying something in the discount bin on the price to free cash flow is actually maybe a smart idea. And so let me just show you my favorite thing, which is enterprise value to EBITDA. And so I can explain what that is. Enterprise value is the market cap plus debt, minority interest, and preferred shares minus cash. EBITDA is earnings. You can all say this with me. Earnings before interest, taxes, depreciation, and amortization. Right, okay. This is something that investment bankers look at when they value companies, especially capital-intensive companies. Miners tend to be capital-intensive. So these are ones that are cheap. Many of them have things wrong with them. Something went wrong, so they got knocked down. Barrick Gold, speaking about larger companies, was recently trading at this ratio of around 5. And that's stupid cheap for that kind of company. They'll improve, they'll fix their problems. Look Look for companies that can fix their problems at this ratio, and they'll do great. Perfect Storm is coming, and if you want to read more of my stuff, go to newgoldbull.com or uncommonwisdomdaily.com, or you can follow me on Twitter, and we'll have Twitter fights, because I like to do that too. So, we'll go on to the next thing.